Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Hormaz Fatakia. Good morning, Hormaz. You know, it started on a good note. We are still in the green, maintaining those levels above the 26,000 mark, but we've come off from the high. So that's the first thing right now. So it's very important to see whether we sustain above that 26,000 mark or not, because every time we touch it, there is some retreat that we see already. But having said that, yes, today it looks like a decent day for the benchmarks, at least for sure. And we did see good handover coming in from the Asian markets as well. For now, the Nifty PSU banks and the Nifty IT space, that is contributing to the gains that we are seeing right now. CPSE index, that has been doing well in last couple of trading sessions, that has been seeing some profit booking right now. If we talk about Asian markets, most of them ended higher with good gains actually. Nikkei up 2.5%, Kospi up 2%. We had Hang Seng sitting with gains of 2%, and the Shanghai also higher by 0.7%. So Asian markets strong. The US markets, they gave us a very mixed handover. But Nifty mid-cap and small caps, they continue to be under pressure. Nifty mid-cap so far in this week is flattish, but with some negative bias. And Nifty has a support at 24,800. So these are some important levels that we'll be watching out for. Very, very important. Very important today will be whether we sustain these 26,000 levels or not. And other than that, of course, we do have a lot of action in the broader markets coming up as well.
Good morning to you as well, Sonal. It's been a good morning for the Nifty at least. And as you mentioned, right, some resistance after we crossed 26,000. But for now, the index is holding on to those levels. As of now, it's a big day today for the Nifty as well. It's the monthly expiry, so we'll have to keep an eye out on that. It's been a good series for the Nifty, almost 850 points. Now make that 900 because of this 50-point gain that we have seen this morning as well. So it'll be the fourth consecutive positive FNO series that the Nifty will have on closing. So we keep an eye out on the index. But yes, the broader markets are seeing some bit of pressure in today's session as well. There are almost 70 stocks on the small cap index that are trading with losses this morning as of now. There are around about 65 stocks on the mid cap index that are trading with losses as well. The advanced decline ratio in favor of the declines as of now, and there is plenty of stock specific action as well. PSU banks, it's one day up, one day down for them, but for now they are in the green, as Sonal was highlighting. But yes, pressure coming in from the broader markets. The benchmarks are holding steady, but starting off with our focus on some of the big movers this morning. One of them is IEX, and this has been the stock that has been in focus all through the week. And today the stock is higher on the back of an Investec initiation. Vivek is joining in now with more details. Vivek.
Well, thank you so much for that, Hormaz. You know, last 3 days we've been speaking quite a lot about IEX and what really has dragged down the shares. Today there's been a bit of a bounce back. So Investec has come out with a note. They have an initiating long fast position on IEX. They have a target price of close to 250 rupees a share. What is it that they're saying? They're saying that the stock has plummeted almost 17% over the last 2 trading sessions due to media reports about an upcoming submission of a simulation report by Grid India, post which CERC will decide on market coupling. Remember, market coupling continues to remain the biggest overhang as far as IEX is concerned. Investec also says that they don't have any insights on timelines as far as coupling implementation is concerned, but they believe the process of operational implementation will be lengthy and may not significantly benefit the power ecosystem. As far as operations are concerned, they expect IEX to deliver a healthy overall volume growth of 44% and a core volume growth of almost 17% for Q2 FY25, which they believe will drive almost a 30% higher EBITDA growth compared to the same quarter last year. They also expect additional clarity on coupling during the Q2 results. However, operational implementation, according to Investec, could take almost 2 years, which ensures near-term earnings at least will be stable. Valuation is corrected to 35 times 1 year forward compared to 45 times that other exchanges are trading, and this is the basis on which they have initiating long fast as far as IEX is concerned.
Right, so IEX continues to be the stock on our radar, has been for this entire week already. Thank you so much, Vivek, for joining us with all those details. The other stock which is buzzing in trade is Zaggle. It is higher in trade today. In fact, earlier we spoke to MD, CEO and co-promoter Avinash Godkhindi, and he says the company is on track to meet FY25 guidance of 45 to 50%. Listen in.
The thesis is very simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are getting augmented with rental income, with investments, with other sources of income, filing taxes for millennials has become increasingly more complex. It would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'd be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance. And, Q2 seems to be shaping up really well. All the growth that we're talking of, 45 to 55% is organic.
That was the management of Zaggle speaking on their recent acquisition and on the road ahead as well. The stock slightly off the highs of the day, but still holding on to gains of 3.5%. Excuse me. The other one that's moving in today's session is All Cargo Gati, and some news bits came in this morning that the company is now planning to hike price increase, has announced a price increase from the 1st of January of 2025, and it's around about the same time this year that a lot of these logistics companies announce price increases or pricing structures for the next year as well. So All Cargo Gati has announced a 10.2% increase on an average in their prices from the 1st of January. Now this is the first such price increase that they have taken in over 4 years, and this is the first time that they have taken a price increase after their acquisition of Gati. And they've also mentioned that this price hike is not applicable to those customers who sign in for the company between the 1st of October and the 31st of December this year. So that for them the price increase would not be applicable, but for the rest it will be. Now why they have increased their prices? They mentioned that they would need these funds for strategic investments in infrastructure and technology, and a price increase was also necessitated because of the inflation and rising input cost, is what the company has mentioned. And basis this price hike, they will be able to make their customer service a lot better, is what All Cargo Gati has mentioned. And they've also highlighted their growth strategy for the road ahead, and they've mentioned that 6 out of their 8 planned city hubs that they were planning in metro cities is also expected to be operational by the end of financial year 2025, which is this financial year. And their ERP platform is also undergoing a complete overhaul in order to improve the efficiency of the company when it comes to deliveries and other aspects as well. So all in all, a price increase announced by All Cargo Gati. The stock had seen a bit of a spike once the announcement had come in, slightly off those highs, but still holding on to gains of around 1.75%.
Okay, so that's All Cargo Gati on our radar, some price hikes that have come by. By the way, just take a look at Godrej Properties, because the company just informed the exchanges a while back that they will be undertaking fundraise that the company has planned. The meeting is on 1st of October. This would be via issue of equity shares or any other eligible securities as well. Now, do remember the last time that the company had done a QIP, it was back in 2021, where they raised around 3,750 crore rupees via QIP. This was March 2021, and this, if it is a QIP issue again, that would be the next one after that. The company had been on a land acquisition spree. Their debt increased because of the same reason, and expansion is something that has been their vision and goal as well. Pan-India expansion is what Godrej Properties is looking at. The stock up 13% week to date as well. So that is the reason why we saw Godrej Properties buzzing a lot ahead of a possible fundraise that the company is planning.
Interesting. Keep an eye out on Godrej Properties and a lot of these other real estate names that have been buzzing in this recent past. But time for a short break here on Trading Hour. On the other side, we'll be joined by the management of Krishna Diagnostics to discuss their recent stake buy in Apulki Healthcare. Stay tuned. Back on the other side. Back with us here on Trading Hour, on to some corporate conversations. Then the Krishna Diagnostics is the management on our radar. The board has approved a 23.5% stake acquisition in Apulki Healthcare. And with this, the company will get exclusive partnership and operating and maintaining diagnostic services of Apulki's hospitals. Now, to discuss more on this, we are now being joined by Mitesh Dave, the Group CEO of Krishna Diagnostics. Mr. Dave, good morning. Thank you so much for joining in. I'd like to speak to you more about this acquisition first. Can you tell us more about this? What does this have a financial impact on your balance sheet post this acquisition? And is there a plan to increase this 23.5% stake further in Apulki?
Yeah, hi, good morning, first of all. And thanks for giving me opportunity. Well, if I should talk around how it's going to impact our balance sheet or the overall financial structure, as such, there won't be anything because it's going through the internal accruals incomplete. And with that, it gives us a future horizon also when we are looking at the top line.
Okay. So give us some more details on this, Mr. Dave. I wanted to understand how much will you be paying for this 23.5% stake. What is the top line that you're talking about? Your volumes will increase, of course, because you're getting the rights to operate and manage the diagnostics lab under Apulki Healthcare. So how do you see increase in volumes? And will it be largely in radiology? Will those kind of volumes see an increase for you?
Exactly. So first of all, while details around the number of the quantum of overall investment will be shared once after the we are going to conclude with the few condition precedent. But however, answering to your second piece, wherein the volumes, certainly, so today the volumes are on rise, looking to the cardiac and the cancer areas, and it gives Krishna a larger exposure to the larger base to provide integrated and comprehensive suite of entire diagnostic services. So with that, we have in total volume which is coming out from this oncology and cancer care area, cardiac care areas, but also it will cater to the ophthalmology or maybe the ENT or any other allied areas where there is a need of a diagnostics. It varies, so it adds up from the radiology as well as to the pathology, from advanced imaging for CT, MRI, PET, USG to the routine to the specialized pathology as well.
By when are you expecting to complete this transaction, Mr. Dave?
It may take another 10 to 15 days time to conclude that.
And which is post which you would talk about the financial considerations?
Yes.
And is there a plan to increase this stake further in the future?
So, well, that's going to be the way the overall thing shapes up into the future times. However, for now, it's on the card to establish what all of the cards to go with the one which we have bagged it for, which is like Apulki in Pune and KDMC. And as such, Apulki hasn't planned to set up another 10. So it's important first to stabilize and to smoothen the operations and then looking around to invest or to take more stake around or not.
Okay. So, Mr. Dave, give us a sense of what is the current number of hospitals or, centers does Apulki Healthcare have right now, which you will be able to manage? What are their plans to increase going forward? That would mean higher volumes for you as well. And with all of these segments coming up, radiology and the other high margin segments, will this mean a margin increase for you going forward as well and in FY25 itself?
Yes. So Apulki currently has two hospitals. One is with the Baner and one is in the Pune and second in the Mumbai. And over the future, in next 10 decade, and it's in next decade, it's going to have close to 10 other hospitals coming up, where Krishna poised to have exclusive diagnostic partners. Talking around the overall financial impact in term positive, it will carry the positive financial impact because of the way the overall structuring has been made and the rates at which this going to be. Currently, Krishna is more around the CGHS plus discounting, wherein this is going to be at an CGHS level. So it will have a positive impact on the overall PAT and the EBITDA as well.
Just wanted to follow up on that. Right now, what's your split like? How much is coming from, say, pathology, radiology versus the other segments? And with this acquisition, will that mix change for you?
Yes, that mix is going to get changed, but that's going to be over the time because it's going to start their operations in the coming financial year. Number one. Number two, currently, if you'll see, our mix is around approx 45-55 pathology versus radiology. And as and when this Apulki getting started and over the time, the overall mix might be see across certain changes, but not to the larger extent.
Mr. Dave, I wanted to ask you about the current number of CT scan machines and that you are currently operational. And you had mentioned in your first quarter earnings call that you are operational currently in 21 CT scan centers, particularly in the state of Maharashtra itself, and there are plans to install another 18. Is that plan on track? And if you could give us a sense of how many overall across the country are you operating in?
So currently, if you'll see that in Maharashtra, with the quarter two coming to end, we are operational at 36 facilities. So if we'll go with that, another 3 which we had shared it out in the first quarter's earnings call, we're going to get live by the end of this month. So we are pretty much on the track with that. And overall in radiology, if we'll talk around, we have close to 60 plus kind of imaging centers as of now spread across.
Okay. Mr. Dave, I wanted to understand demand trends in quarter two. We are towards the end of quarter two as well. Quarter one was very strong for the company. You saw a 20% growth. Margins expanded to 25%. Is this a trend that would continue, or do you think second half will be better than first half?
So certainly second half always carries little impact from the seasonal as well. Wherein the cases on rise because of the rainy seasons, there are the greater instances as well. So you can expect something better than the quarter one.
Okay, so there'll be betterment than quarter one. So what kind of targets do you have for FY25? Margins have improved to 25%. You've done 26% as well in quarter one. Is that a range that we can look at? And the 20% growth that you saw, do you think that is something maintainable?
So yeah, the growth is pretty much maintainable, and that's why we are going to carry it for the entire financial year, even when we would be ending FY24 and 25 as well. So I don't see there is any challenge to it.
Mr. Dave, you did 170 crores in the first quarter. If you extrapolate that, would 700 to 750 or maybe 800 crores by the end of FY25 be a realistic possibility on the top line front?
It's absolutely realistic, and we are very much on the way.
I wanted to ask you one final question on the radiology order that you had won from the Baba Atomic Research Center. How is that progressing, and when is that expected to accrue into your P&L?
So that might take a little more time, looking to the quite a few operational areas which we need to take care, looking to the kind of a terms and condition. But yeah, maybe within this financial year.
Okay, last question from my side before we let go of this conversation, Mr. Dave. You know, last year or before that, we were talking a lot about pricing pressure coming by in the diagnostic space. There were a lot of online players joining the industry as well. Do you think that competitive intensity is done with now and prices will stabilize, realizations will stabilize, or maybe improve from these levels?
Now, as such, while there was a certain kind of a price wars which was there in the past, or is still going on, I should say, it's not yet ended. But certainly, people are more aware now, and they're looking for the qualitative diagnostics. So I guess, yes, in the coming times, looking to the qualitative diagnostics, accessibility and affordability going to play a major role, where this price has to get settled down to provide people or the masses the qualitative diagnostics.
All right, Mr. Dave, thank you so much for sparing time and joining us to talk about this acquisition and, of course, a lot about the business as well on the road ahead. Wish you good luck for the rest of FY25. That is the management of Krishna Diagnostics there. 1.5% higher so far, around about 850. Time for a short break. Up next, we discuss the way forward for the markets. Ajit Banerjee, the Chief Investment Officer at Shriram Life Insurance, joins us on the other side. Stay tuned.
Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals now. Ajit Banerjee, Chief Investment Officer at Shriram Life Insurance, is joining us now. Mr. Banerjee, good morning. Thank you so much for joining in. And we are talking on a day where Nifty is comfortably above the 26,000 mark. We are touching new records every day. What are you making of the markets now? That's, of course, the big question. Isn't it too stretched in terms of valuations? If it is there any space where you are finding entry available now at these valuations?
Okay. Good morning, Sonal. Thanks for having me on the show. I think quite a long question, so I need to break it up piece by piece to respond to you. Yes, it's a fact that at this point of time, the valuations looks quite stretched. But certainly we need to look at it from a long-term perspective, because if you see in the realm of the overall, where the other large economies of the world are standing, then certainly India is the only oasis in the desert, as we see. So certainly, if you are actually trying to, position yourself from a long-term perspective, where else do you actually have an opportunity to invest and make money? So keeping this in mind, I think the FIIs and FPIs who thought for a while that the valuations are very stretched and they pulled out, now have, possibly has realized that they cannot wait till the cows come home. So therefore, they are once again coming back to the market, and yes, finding at this point of time the right pockets, right set of stocks, right sectors, at a reasonable valuations, what you would like to, is a bit challenging. So therefore, you need to focus primarily on the fact that structurally, which are the sectors and the stocks which have a long-term, prospect to come. And naturally, at this point of time, the way in which the economy is poised, the Fed has already, announced its rate cut. So definitely, and the rate cut also has happened at a time which is primarily to ensure that there is no, slippage into a recession, what initially was envisaged. So they are ensuring that the soft landing is ensured. So once that is the situation, then we can expect that there will be also revival of the growth in the US. And if the growth revival happens over there, that's good for the entire world. Because all said and done, they are the one which is the largest economy and largest financial market in the world. So if they are looking good, then we can expect certainly that, and the money is available cheap, so the emerging market stands to benefit. So now specifically to find out which are the sectors, I think we need to look at it from I would say, a long-term perspective, and what fits it into presently the economic positioning of the country. For example, at this point of time where India is headed, so I think the rural-based economy is poised to do well. So therefore, it may make sense to focus on the FMCG sectors, the within auto sectors, maybe the two-wheelers, as well as tractor segments, for us, so as to say. Pharma also is looking good. IT from long-term perspective, there is a ray of hope which is there. So there are certain sectors certainly, which you have to do a deep dive to get into.
Mr. Banerjee, good morning. Thank you for joining in. You called India an oasis in a desert, but the desert will have a lot of cactuses as well. So are there certain sectors where you're recommending your clients to take some money off the table now?
So almost, the rose also has a lot of thorns. You need to pluck it carefully, right? So I think, that always be the case. So I think, if you have to make money, you need to be careful. And, the worry is that a lot of momentum buying is happening. And that is where you need to certainly, sort out and do a deep, due diligence for picking up the stocks. So it cannot be a situation that, it will be an easy flow, while the liquidity is easy flow at this point of time. But certainly picking up the right stocks will not be easy. And that's what I can respond at this point of time.
Okay, all right. So, we've seen rate cuts and we've seen FIIs putting back some money in the markets. Do you think this is a trend which could continue? Because it's not a secular trend that we've seen so far. But do you think FIIs could come back to India in a big way now?
I guess they've realized that, they cannot stay on the sidelines for long. Otherwise, they're going to miss the, bus. And certainly they want to join the bandwagon now. But that does not mean that, they would be wedded, even if the ground realities deteriorate. I think that possibility still remains. So certainly they would be, looking for markets where possibly the growth and the valuations both are favorable. But that would be slightly hard to find at this point of time. So naturally, then, with so much of money available and also cheap money going to be available now. So in that case, I mean, the option would be actually India, and they would be coming. And also, if you see that with, just now I was seeing one number that about 50,000 crores worth of IPO, including the big names like, Hyundai as well as, Swiggy in the pipeline. So I think that would certainly warrant a lot of flows from the FIIC. That is what my reading is.
Mr. Banerjee, we'll leave it at that. Thank you so much for sparing time and sharing with us your thoughts on the road ahead for the markets. Looking forward to chatting with you more often on this platform. By the way, to pull up a couple of stocks that are seeing some selling pressure. One of them is KFin Technologies. That stock is now down to the lowest point of the day, almost 5% lower. There is a KFin Technologies. And on the flip side, the other stock that is doing well, though, is Bajaj Housing Finance. The recent listing, it saw a bit of a decline for a couple of trading sessions, but today, firmly in the green, 4.5% higher, is Bajaj Housing Finance, now 160, still below its closing price of on the listing day, which was 165, but still firmly in the green. Time for a short break here on Trading Hour. On the other side, we put the spotlight on some more stocks that are buzzing in today's session. Stay tuned. Back on the other side. Welcome back. And a whole host of stocks are moving around in the broader markets today, even as the indices are at a high. But the broader markets is seeing a lot of stock-specific activity. And to talk about all of these buzzing stocks, we have our entire research team that is joining in. First up, Nimesh joins in on Trent, and that is after Citi issued a bullish call on the stock. Nimesh, over to you.
Hi, Armaz. There are a couple of reasons Trent is buzzing in trade today, but not only for today. In fact, if you look at this year itself, it's been a big outperformer and a massive wealth creator as well. Now commanding a market cap of close to 2.8 lakh crores. As I said, there are a couple of reasons for the stock to buzz to be buzzing today. One, Citi has initiated a coverage on the stock with a buy rating and a target price of 90 to 50. This seems to be the highest and most aggressive as far as target price is concerned. Now, they've also added the stock to the Pan Asia High Conviction Focus list. That's the kind of conviction they have on Trend. Now the company has seen a big transformation from a single format to a multi-format and a multi-category player, which has led to a revenue CAGR of almost 36% between FY19 to FY24. But from here in the next 4-5 years, Citi expects industry-leading growth of almost 40 to 50% CAGR between FY24 and FY27 estimated between revenue, PAT and EBITDA. That's the key reason why they've been so bullish on Trent. The second reason is the technical factor. Now, Trent is getting added to the Nifty effective tomorrow's close. According to most of the brokerages, the estimated inflow is in the range between $600 to $700 million. JPM is at $670 million, which means a buying of close to 74 lakh shares. Remember, it's a thinly traded stock, so if there is no big supply, you might see a bit reaction tomorrow as well. So, two reasons why the stock is buzzing. One, Citi initiating report with a buy, and two, the technical factor that it's getting added to the Nifty effective tomorrow's close.
Okay, those are important points. Thank you so much, Nimesh, for joining us with all those details. It's just not the broader markets or the stocks which are moving into Nifty. Nifty stocks are also in focus. Hero Moto has slipped in trade after brokerage UBS has issued a sell rating, citing number of reasons here. Vinny is getting us more details on this one. Vinny.
Good afternoon. Yes, we are seeing a fall coming in for Hero MotoCorp. UBS sell rating, target price 3,350 rupees per share is what they've given. The main reason for this sell rating is that they believe that the wholesale volume numbers, because of festive season, there's optimism around that. But the retail numbers, there is a bit of an underperformance, and that could be a bit of a pressure for Hero Motor. Other than that, the festive season, obviously, we'll see this next couple of months, which could see some bit of an excitement in terms of volumes. But after that, that is not something that is aiding the whole year performance for the company. So the Vahan retail growth also is much lower for Hero specifically. And over the last few years, if you've been looking at it, the retail market share for Hero Motor during the festive season also has been dropping. So that market share on the retail front has been dropping over the years, and the new launches are not something that has been supporting them. Keeping an eye out on that, because September 2024, they'd seen a market share loss on the retail side, and despite these launches, it was only around 24%, actually below the 24% mark. Do not forget, valuations are quite high, currently trading at 26 times. When you compare it to the historical average as well, it's been quite high. So keep an eye out on that. The stock has already seen a run up since Q1 earnings con call of around 20%. So interesting to watch out for here today, down and out in trade.
One of the losers on the Nifty is Hero MotoCorp compared to most of the other auto stocks that are doing fairly well in today's trading session. But next on our radar is the big boy HDFC Bank, and that is on the back of some fresh brokerage calls that have come in on the stock. Vamakshi is joining in with more details on that. Vamakshi, tell us more.
Well, Horma's HDFC Bank in focus today after, there are a couple of brokerages that are reacting to the buzz around HDFC Bank's potential sell down of nearly 60 to 70,000 crore worth of loans to bring down their LDR or the loan to deposit ratio. The first one that I'm looking at is the one that came from Nomura. They have a neutral call, target price of 1,720 per share. They say that this sell down could accelerate the LDR resolution, but in turn could impact the medium term EPS as well as ROE. They've cut their FY26-27 EPS estimates by around 2%. They further add that overall market for securitization of loans is projected to be somewhere around 2 lakh crore for FY25, and this potential sell down of the loan book could actually be almost 30 to 35% of the market. It remains to be seen whether such large volumes can be absorbed. But on the other hand, we have quite an optimistic call coming in from Macquarie. They've got an outperform call, target price of 1,900 per share. They say that HDFC Bank's LDR from a peak of 110% has declined to 103.5% and is expected to come down further. This potential sell down, is in line with the strategy of consolidation of balance sheet as well as focus of the company on margins and profitability. In fact, they go on and say that they expect NIM to improve a further 5 basis points sequentially in the second quarter to 3.52% as compared to most other banks. Also note that Q2 will be the first quarter post the merger when the YOY numbers will be finally comparable. Due to base effect and sell down, as per reports, Q2 loan growth could be less than 10% is what they anticipate. They believe that HDFC Bank's peers may report flat to slightly declining margin, and in fact HDFC Bank is their top banking pick on easy liquidity conditions. So overall, a positive view coming in from Macquarie.
All right, positive view. The stock has recovered sharply from the lows as well. It's absolutely flat right now. If you look at HDFC Bank, an important will be the quarter 2 operational update, as Vamakshi mentioned, the first quarter after the merger, where we can compare the YOY numbers. We'll do one thing, we'll slip into a break now. When we come back, we'll discuss market technicals with Vishal Malkan, also discuss the top trading bets. Welcome back. You're still tuned in to Trading Hour on CNBC-TV18. Well, it's the monthly expiry day, so a lot of move that is expected towards the last trading hour. So it's a good time to get a technical check on the markets. Vishal Malkan from malkansview.com is joining in for just that. Vishal, good morning. Thank you so much for joining in. Tell us what's expected from the Nifty today in terms of important levels.
Hi, good afternoon. And I think the way markets are positioned right now, it's making higher highs and higher tops, higher bottoms and higher tops, which is a clear sign of a strong uptrend. And we can see a clear sector rotation happening on the macro level, where we saw that in the last few days, metals and even the banking sector have picked up in the last 10 days odd. So it's clearly a bull run. We always think that whenever market makes a new high, we are skeptical that or it may have a correction and all, but as of now, there are no signs of correction.
So 26,200, 26,250 on the cards then for the Nifty, Vishal?
Very much possible, yeah.
And what about your specific stocks then? What are you betting on this morning?
So I'll go with the flavor of the month, which is October series, would be metal. And my first pick would be VEDL, which is breaking out fresh out of that 480, 490 levels with breakout on RSI levels as well as Bollinger Bands. So I'll go with a buy on that with a stop of 478 for targets of 520 and 540 in the next few trading sessions. And the second one, I'll go with the banking sector, especially in the PSU bank, where the Bank of Baroda is showing good support at levels of 240. So I'll go with a buy on that with a stop of 238 for targets of 255 and 265 in the next few trading sessions.
Okay, all right. So those are the names that Vishal has bets on. Thank you so much for joining in with those technical trades. Let's move on. Market veteran Ramesh Damani says the Indian market is now transitioning from mid-caps to large caps. He also shares his thoughts on the retail participation in the F&O market and PSU stocks. Now, listen in.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about 1 crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुकी जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation. Investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead. But what a great run they've had. I mean, 30 गुना बढ़ गए, उसके बाद 20% घट गए, तो घट गए. I mean, there are a lot of other stocks in the PSU sectors, in the oil and gas sector, for example, in the engineering, in construction, that still looks good. I mean, no sure goes up all the time. Everything corrects. So it's just, it's a fallacy thinking. Everyone says, oh, I told you so, but you didn't tell me when the price was 200 and I could make 30 times the money. Bull market का जो leadership अभी भी PSU में, but the roles are transitioning. So I feel somewhere in the oil and gas sector, some in the engineering, some in construction, will continue to do well. Power sector will continue to do well. It'll be a good time for stock market, it'll be a good time for investors, and it'll be a good time for entrepreneurship in India. I think democracy almost demands that. As the best example is that whether you look in the America S&P 500 or look in the Sensex 30, look at where they were in 1980 and look at where they're 2040, 50 years later, 60 years later. Most of the components have left. They're new companies, new blood, new ideas.
So like in life, in stock market, best is yet to come.
I would think so, Anuj. I would definitely think so. I'm hopeful. So I may not live to see another 10, 20 years of what's happened in the stock market. But if you ask me, I feel that the investing for the next 30 years is as much fun as it was the last 30 years. And as Warren Buffett said, that if he could have a pill to live longer, he'd give up a large part of his money, but he would retain his, wisdom and his health. So he could continue to invest and see the great Indian experiment, what happens.
Welcome back. Now, marking a decade of the Make in India campaign, veteran industry leader R.C. Bhargava commented that tax policies in the country need to be regularized and smoother for companies and individuals alike. Listen in.
I think one of the things which I personally think is required, which happens the world over, is further simplification and rationalization of the GST system. All major economies today, the developed countries, do not have a multitude of tax rates and levels and cesses and all of that, which distorts the picture in the marketplace. Worried about the loss of revenues, which they did when the GST came along also, but it has proven that GST actually was a great, great boon for everybody, including the state government. And I think they have to now fall in view with a more progressive approach to taxation. You look at the taxation on products, petroleum products. The tax varies from state to state, and it makes it very difficult for consumers to easily move towards buying motor vehicles because of the high cost of maintenance. Equally, states have put other taxes like the road tax and things which have substantive additions to the capital cost of buying. We saw the impact and we are seeing the impact.
Okay, that's the word coming in from Maruti. But with that, we'll wrap on the show. And as we do that, here's some good news for our viewers. India's business news leaders now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.